Once again, we see the indices rising with the market performing well in general, but more than ever, we need to be careful because despite the rise, both the SPY and the QQQ are showing some weakness today, close to their resistance levels. This is a classic warning sign, and everything depends on how the market behaves over the next few days in this resistance area. This is one of the market's most important inflection points, so let's see what happens over here. Welcome to the Finance Hydra channel. My name is Nathan, and here on this channel we analyze the market together, we study the market, always paying attention to the technical evidence, using technical analysis and price action to base our ideas, our thoughts and our strategies. Again, welcome to the channel. Now, as we can see here, SPY is going up today, not much, alright, but it is 0.24% roughly the time I'm recording this video, but it is making a bearish candlestick pattern, and that this reaction occurred right below the 600 resistance level, the previous top level and the previous all-time high resistance level as well. By materializing a top signal below this key point, the SPY could correct to lower levels, to our next support levels, because it is showing some weakness, okay? If we see a pullback to the moving average, to the 21-day EMA, or maybe even to the 586 down here to this support level, it is not gonna be a huge surprise, but that's the limit for the SPY, okay? Because if SPY loses this support area, we could trigger a midterm reversal chart structure, suggesting a sharper correction ahead, alright? What's more, if we take a look at the weekly chart, for instance, we see that from a technical point of view, there is still more downside left for the SPY. We could easily correct to the moving average, to the 21-week EMA, or maybe even to the 565 down here. This is not gonna ruin the long-term bullish bias, but it would be a quite annoying correction, right, of roughly 5%, so we gotta watch out for these key points over here. What's more, by losing the 586, the SPY could trigger a possible not triggered yet, alright, a possible double top chart pattern, okay, which only reinforces the idea of a sharper correction to the 565. Of course, one single bearish reaction near a resistance level is not enough for us to panic, alright, because this is not necessarily a top signal yet, just like here, just like over here. Alright, we saw these bearish candlestick patterns over here below the all-time high resistance level just to see another breakout in the next few days, alright? So there is no top signal confirmed yet, just like in this scenario over here, in this case over here, alright? So one single bearish candle is still not enough, but if we see a correction, okay, the 586 support level near the 21-day EMA is going to be our next major support level. If we actually lose this key point, okay, we're gonna trigger a sharper correction on the weekly chart, target 565. But Nathan, what if we break this resistance level? What if we actually what if we see a bullish reaction in the next few days, breaking and closing above the $600? Then we're gonna trigger one of the best bullish chart structure ever, right? Another bullish pivot point. When we are in a bull trend, we see higher highs, higher lows, all right? So if we see a bottom higher than this bottom over here, followed by a high higher than the previous high, okay, another classic bullish pivot point triggered, another bullish continuation chart structure triggered. In this scenario, we are gonna just keep going up, seeking higher and higher levels. But in order for this scenario to materialize, it is extremely important for the SPY to break the 600 psychological resistance level and technical resistance level as well, because it was the previous top from November 11. All right, so it is very important for us to see a crystal clear breakout as soon as possible, closing above this resistance level on the daily chart. Only then we're gonna see a crystal clear bullish continuation chart structure. All right, meanwhile we see the QQQ also struggling to break a resistance level. In this case, it is not the all-time high, but it is this gap resistance level over here around 507. We just closed this gap today, all right, confirming that in the end it was just an exhaustion gap over here, all right. But by failing to maintain the price above this key point, we are making another bearish reaction, showing some weakness as well. We are still above our multiple support level, namely this purple trend line over here, namely the $503, namely the 21-day EMA. What's more, we are also above the 498, the previous top level over here multiple times, now support level multiple times as well. So there are many support levels that could hold QQQ's price, but if we actually lose all of these support levels, then the QQQ will materialize a crystal clear bearish reversal chart structure named bearish pivot point. All right, making a crystal clear lower high, lower low. Therefore, it is extremely important for us to see the QQQ continuing the bullish momentum to retest the 515 again, which was the previous all-time high, maintaining the price above this multiple support level. Because if we lose this support level, if we actually trigger this bearish pivot point, in this scenario, we could correct a little bit more to the 21-week EMA or maybe even to the 477 again, all right? So far, apparently the indices are trying to maintain their prices above their support levels, which is good. They are maintaining the uptrend, but if by any means they lose their support levels, we are gonna technically reverse. If you ask me, Nathan, what are the odds of a bullish continuation? Well, since we are already in a bull trend, the odds of a bullish continuation are higher than a crystal clear reversal, all right? But in any case, it is important to keep your eyes open around these support levels. Now, how this is going to affect our stocks? Because as far as I know, Nvidia is already losing its support levels, all right? It is losing its support levels. We are losing this purple trend line. We lost the 21-day EMA. We made what seems to be a double top chart pattern below the 149 resistance level. If you ask me, this double top is quite visible over here, all right? We see a double top chart pattern right now, suggesting further pullback to our next support level near the 130s. Okay, then we'll see if Nvidia will be a buy again or not. Right now, we entered bearish territory again. We are not bullish at all. But Nathan, could we see a bullish reaction like tomorrow, making this a false breakout of the neckline of this double top chart pattern? It could, of course it could, but in order for this to materialize, we need to see a bullish reaction in the indices as well. All right, we must see a very good, meaningful bullish reaction like tomorrow. And then maybe we are gonna avoid a sharper correction to the 130. For now, we are on the verge of triggering this double top chart pattern. We already lost many support levels, so Nvidia is not bullish right now at all. Okay, it is not bullish yet. Could we turn bullish? Yes, we could, but there is no technical evidence supporting this idea yet. Maybe tomorrow, maybe in the next few days, we are gonna see a crystal clear bottom signal. For now, there is no technical bottom signal on Nvidia. What's more, if you're still watching this video and you're not a subscriber, consider subscribing, because we are here every single day giving you guys detailed technical analysis. All right, we analyze many stocks together over here, so subscribe to this channel if you are enjoying this video and click the like button to support me as well. All right, now Tesla stock over here is making a bearish reaction below the $358. This reaction could be a top signal. All right, and there is the idea of a double top chart pattern as well, right? Because we went up to hit the $358 in November 11. We dropped just to recover to the $358 again. All right, if we actually see a top signal materializing a correction to the moving average or to the $313 again, that's the limit for Tesla, because by losing this double support, this double support area again made by the 21-day EMA and the $313, by losing this double support level, we are going to officially trigger this double top chart pattern, suggesting further correction, possibly to lose the $300 support again. All right, that would be a quite ugly bearish reaction in Tesla, suggesting a sharper correction on the weekly chart as well. All right, because on the weekly chart we are quite far away from our support levels. So if we see a correction on the weekly chart, let's not panic, let's not be surprised, because that's expected, especially if we see the materialization of a top signal, of a double top chart pattern on the daily chart over here. So let's watch out Tesla very closely, because by losing the support level, we are gonna technically reverse. All right, but Nathan, what if we see a pullback to the moving average again, and if we see a bullish reaction around this area over here? I see Tesla continuing the bullish sentiment. All right, because Tesla is still bullish. It is still in an uptrend. So if we see any meaningful bullish reaction above the support level, fantastic. We could see another possible buying opportunity. For now, is Tesla a good buy? No, we are trying to make a top signal below a resistance level. There is no technical evidence suggesting a breakout yet, but if we do see a breakout, what's our next technical target? $384, the next technical resistance level from April this year. Guys, we can't tell the future, all right? This is not why technical analysis exists, all right? It is not about predicting the future. It's about reacting properly to what we see right here, right now, okay? And right here, right now, we see many weakness signals in the indices, in many other stocks. So now it's time for us to be careful. Okay, let's just be careful and see if a pullback will bring a new opportunity or not, will bring new opportunities or not. Meanwhile, we see AMD trying to make a decent reaction around a support level. Last week, we saw this Harami candlestick pattern mixed with a doji candlestick pattern. We are trying to react above this long-term support level. This is very good, all right? It is a very good signal. If you ask me, AMD has everything to recover, to seek higher levels, but it is very important for us to see AMD also breaking the 21-day EMA on the daily chart over here, all right? We are still below the moving average. We are still in bearish territory, but it is looking very good, all right? I do agree. It is looking very good right now. It is worth paying attention to AMD in the next few days, because a crystal clear breakout of our resistance levels could change everything over here. AMD is looking very good. It is a quite promising stock near a long-term support level, near a mid-term support level as well. So apparently we have everything to react. We just need to see more confirmation. Now, Palantir made a new record high today. Fantastic, all right? Fantastic, new record high. Now we see a bearish candlestick pattern. I know it is going up today, but today's candle is clearly bearish. By materializing a bearish candlestick over here, we could see a possible top signal suggesting a correction to the 21-day EMA again. Now, Nathan, a pullback to the moving average is not a reason to panic, right? Right, it is not. But if we lose the moving average, we could see a sharper correction on the weekly chart, possibly to the $45 again, which is above the 21-week EMA. So a pullback of this magnitude could happen if we see a top signal triggered on the daily chart. I'm so sorry, a bearish reversal chart structure on the daily chart. Right now, we are on the verge of making a top signal, so let's be extra careful over here. And the Micron is going up nicely. This stock over here is phenomenal. It is performing very well. It is making a bullish reaction today. Today, Micron hit our target. All right, I had a personal target here in Micron around $105. Let's analyze Micron for educational purposes. All right, I gave you guys this recommendation on our Telegram channel, the 5% Project, which you are invited to join, because over there you have access to many trading signals, trading ideas, trading strategies, and of course you can download our free ebook on technical analysis, where I teach you guys how to trade every single bottom signal, every single top signal, many chart structures. I analyze all of these things and I teach you guys how to trade all of these signals, and we apply these strategies together every single day on our Telegram channel. So join our Telegram channel over there. The link to my website is in this video's description. All right, here Micron closed our gap. Remember, gaps work as magnets for the price when we see reversals. In this case over here, we saw a crystal clear support level. It did a bullish harami candlestick pattern on the daily chart and a possible pivot point cup and handle chart pattern on the 1 hour chart. By closing above $98.20 over here on November 20, it triggered our buy signal. Today we hit our target around 105. If you ask me, we have more upside potential. We could seek higher levels, maybe to close this gap, or maybe even to retest the 114, which seems to be a quite realistic target to us. All right, but for now, we see the market losing momentum, and if Micron loses today's low in the next few days, we could see a top signal triggered, and that's gonna indicate a sharper correction on Micron as well. All right, so this one over here was a very technical trade. No reason to worry ourselves over here, guys. I always share technical strategies with you. All right, most of you guys sometimes feel nervous about the market when you trade using a crystal clear strategy. There is no reason to worry, all right? Because although we can't win every single time, all right? We can't win, all right? There is no such thing as 100% accuracy. We are not gonna win every single time, but for every single time, we are gonna try to make more money than we are risking, all right? Our wins will cover our losses. This is how we trade correctly. This is how you achieve long-term consistency. All right, so every single strategy, every single insight described here in this channel is purely technical, using technical analysis to background our strategies. All right, now we see ARM Holdings. This one also triggered a trade for us. Let's see. Let's go back over here. ARM Holdings triggered our trade down here. Morningstar candlestick pattern on the daily chart, crystal clear cup and handle chart pattern on the 1 hour chart. Right now we are having some problems in breaking the moving average, the 21-day EMA on the daily chart. We see a possible top signal. Our technical target is 154. However, if we see the broad market reversing, making top signals, if we see the indices making top signals, we could see ARM Holdings reversing as well. So this signal could be quite problematic and a possible reason for us to book profits quickly over here, okay, if we actually see a bearish reversal. For now, we are still above the moving average on the 1 hour chart. We don't see lower highs, lower lows, so the situation seems to be still under control, but it is quite ugly to see such bearish reaction below the 21-day EMA. I do agree. This is something to worry, all right? So let's pay extra attention on how ARM Holdings is going to behave next. And guys, remember to subscribe this channel if you are new around here. Click the like button to support me. If you did enjoy this analysis so far, join the 5% Project for more trades, for more strategies, for more signals. Thank you very much for your audience, my dear friends. Stay safe. See you guys tomorrow.